Hello, dear friends. My name is Clive Thompson. Today is Thursday, let's have a look, the 11th of December 2025. We're coming up to Christmas. I'm going to talk today about the Federal Reserve and nothing but that. It's going to be a very quick video. Last night, the Federal Reserve decided to cut interest rates by 0.25%. This was the third and last consecutive cut for 2025. They cut the rate to a target range of between 3.5 and 3.75. So the way we express that is a cut in rates from 4% to 3.75, where 3.75 is the top of the target range. The Federal Reserve usually has a target range of 0.25%, so this time the new target range is 3.5 to 3.75, which you will hear said on the radio as cut the rates to 3.75, i.e. cut to the top of the range, 3.75. But the reason there's a range is to allow some flexibility because it reflects the rate of interest at which banks lend to each other, and that allows a little bit of flexibility in the market. The decision to cut the rates was not unanimous. In fact, there was significant dissent among the committee members. Some officials wanted to keep rates steady, while other officials wanted a larger cut. This is showing growing division within the Fed, and it obviously begs the question as to whether there'll be any more cuts next year, given and also on the size of the cuts. But the fact that unanimity is going away here does indicate that we have less certainty about the future direction of interest rates. After the conference, Jerome Powell explained that the Federal Reserve is in a wait-and-see mode. He noted that policy is now well positioned to respond to future developments. In other words, they can put rates up, or they can put them down, or they can leave them where they are. And he said that the Fed would carefully assess incoming data before making any more moves. Mr. Powell emphasized that inflation remains somewhat elevated, it's too high, mainly due to tariffs. And he said that the labor market faces significant downside risks. So we have the dilemma at the Fed, who's got two mandates: one, to keep full employment, and two, to keep inflation low. And those two numbers are both pulling in the wrong direction. High inflation means that they should be raising rates. Falling employment means they should be lowering rates. So which direction do they go? Or do they just do nothing next time? So basically he's saying that inflation is elevated and the labor market faces significant downside risks, in other words, less jobs. As for the market reaction, stocks rallied strongly, despite this being called a hawkish cut. Hawkish means there's indications that there might not be any more cuts for a long time, or even worse, that it might change direction and start becoming rises. But despite that, stocks went up a lot. The S&P 500 went up about 1% to near record levels. It rose about, let's see, I'm just looking here on the indices. So let's go here. I'm looking at the wrong section. The Dow Jones went up by 500 points on the news. So that was quite a big rise. And just going to look at the S&P here. The S&P rose, so Dow Jones was up 500 points or 1%, and the S&P 500 was up 0.67% or 46 points. And the NASDAQ index was up 0.42%, not as much as the other two indices, but it was up to 50,600. Now, all of these indices still remain very, very close to their all-time highs. They're all below the all-time high, but they're very, very close. One can hardly call it a bear market. We're a long way from that. So we're now at a new rate, down from 4% on the federal funds rate down to 3.75%. Ladies and gentlemen, that's all I've got to say for this evening. Oh, I'll just mention that gold and silver rallied a little bit on the news, slightly up. Silver was the bigger winner, with silver currently trading at $62.18 on the near future and $61.97 spot, and the gold price is at 4,214 spots. So the gold is actually off its peak from yesterday, about $13, and the silver is up from its peak yesterday by about 15 cents. So 61.97, call it $62 if you like. Thanks very much, ladies and gentlemen. Like and subscribe, and speak to you soon.